Hi friends, this is Chris. Welcome back to the channel. So Netflix just reported earnings and I noticed the stock was dropping and they wanted to make a quick video for you guys and we'll just go over some things. So let's just jump right in. You can see here, Netflix is down 8.5% in the after hours and it's had a great last year. So if you bought Netflix exactly a year ago, you'd be up 120%. So over double your money, which is fantastic. They had a big scare, last year and was just like falling off a cliff. And then suddenly started rallying, but earnings were a little bit disappointing. And so now that it's going down. So they're currently trading at a PE of 51, which I believe is a bit high. And this is a lot of the market that was like this. Tesla is also falling after hours, down 4%. It's had a good year, up 70% if you bought it a year ago, trading at a PE of 85, which is also very high. So basically the headlines with Netflix, because I was like, okay, what's going on? You can see here, Netflix shares fall after sales and forecasts come up short. So they still make money. It's not a question of that. It's just something can be overvalued. That is a real possibility. And I know for a lot of people who do this, everything, oh, it's a good company, et cetera. Yeah, it is. I mean, Netflix makes money, but they're a bit overvalued at the moment. And essentially the way this works is people expect more growth, essentially, right? So the revenue is not coming up as great and their forecast isn't so good. There's a thing here that was interesting. They were saying here year over year, and this is just revenue, not your earnings, but your revenue. I guess it's a 2.7% growth year over year in terms of revenue. And then next quarter, they're projecting a 7.5% increase in revenue. So you're looking at a single digit increase in revenue. And then your earnings, though, are actually doing okay. They're making $3.29 a share. However, compared to quarter two of 2022, it's $3.20. So it's kind of flat. I mean, yes, it's growing, but it's not like oodles a bunch. Now, the other thing that was kind of interesting here is how many memberships are they getting? So from this quarter here, quarter two 2023, it's an 8% increase year over year, right? So, we're not going 100% increases, anything like that. And they're sort of, revenue forecast for next quarter and then sort of where their membership growths are kind of in line, right? So you're looking at like 7-8%, that kind of stuff. One of the things that has been really interesting is actually they're cutting their cheaper tier. I was looking at this. So if you're in the US or the UK and you want to get the cheapest Netflix plan that does not have ads, that will be gone. So right now at the moment, you can get standard Netflix with ads. That'll be $6.99 a month. And then after that, you have the standard without ads, I believe, and that's $15.49. There used to be a $9.99 plan. That plan is gone. So the $9.99 plan is gone, and you missed out. And you can see here, the scraps is cheapest plan. The other thing, too, I was thinking about as well is, when you talk about standard plans, that's to watch in full HD, right? So 1080p. These days, I think a lot of people on 4K, myself included, I'd be curious if you guys are, and if you know, I record all my videos in 4K, so it should look good on your TV. And I'm assuming that, these days a lot of people want to get the premium. So I'd be curious your thoughts on that, but I assume that. And the premium is $20 a month. So, I wouldn't be shocked that maybe, in the future, maybe you're looking at like a price increases or maybe they start to eliminate stuff. One of the things that I think is interesting with Netflix is how are they going to handle the Hollywood strike? That's both the writers and the actors. And, one of the things that, and we've talked about in comments, and I've just told you guys before, I'm in Korea and I have a lot of friends in the film industry. I work in the film industry also. And Netflix has been investing quite a bit in Korean content, as you guys know, with Squid Game. And it was interesting because it was like their top performing show. They released numbers, and the Stranger Things was like, I think it was like number 2 or 3. But Squid Game was the most viewed one, and it cost the least. In comparison, it was something like, I can't remember exact numbers, but to give you just ballpark figure, Stranger Things, they'll spend like, say, 100 million, 120 million on, producing that thing. Whereas like Squid Game, like you can produce it for like, 10 to 20. And so you can produce it for, 1/5 of the cost and get, crazy amounts of views. So obviously from a business standpoint, that's the way to go. And so, Netflix will probably do better than other companies who haven't been investing abroad. The other thing too, I was thinking about, and just want to share with you, if we get a lot of pause in film productions, which has been reported that I think like the Mission Impossible sequel and maybe like the new Wolverine, Deadpool, if you don't know, and Hugh Jackman and Ryan Reynolds will be filming together. I think that one's been postponed. There's going to be a lot of things that are going to be postponed, and companies that rely on new film content, in particular the movie theaters, are really going to get hurt badly if there's no new movies coming out next year. So Netflix will still produce content. I think they'll probably start going more reality shows, documentaries, and then foreign language shows. If they can keep producing, like, say, really good Korean content, and they might move into Vietnam, India, etc., they will still survive. However, the question is going to be, I'd be curious if people are going to be okay with this, say $15.49 and, no longer the $9.99 kind of thing. And they're doing this interesting thing too, where you can add member slots. So like you can have like your main Netflix account, and they're saying you can add someone for $7.99. The basic idea is that they don't want people password sharing. That's the basic idea. They're trying to cut back on that. So Wall Street, though, wasn't too impressed with the growth. They want more growth from Netflix. So they still make money. They're just not growing is to justify their valuation. So I think that's kind of what's going on here. And we'll see. I think a lot of stocks in the market are overvalued at the moment. Nvidia is probably the biggest one, but in our market, it's a real thing. You can make money off momentum and hype. That's a very, very real thing. And just know what kind of market that you're in. And so this is where the earnings reports of companies, when they come out, when they actually tell you the real numbers, it's like, well, do we still believe the hype or not? And also the changing landscape. So the changing landscape for Netflix is their streaming competition, though, is struggling because it costs money to make things. I think Disney was just recently saying, hey, we're not going to spend so much money on content and still try to get your views, because that's the name of the game, right, in business, is you want to try to limit your expenses if you can and boost your profits, right? Just basic business concept. And then you take a look at something like a Tesla, where they're facing competition as well, so their margins are decreasing. The interesting thing about Netflix is their margins were okay. I was looking at this. It was listed here. Yeah, their operating margin, it's at like 22%, and then last year was like around 20ish. So it's about roughly the same as what it's been. So like I said, they make money. They're not going away anytime soon. Their free cash flow, this is like 1.3 billion, so that looks good. But it's just a lot of this stocks in the market are priced for crazy growth. We've been looking at different news on recession. Various banks have been cutting back their forecasts on if it's going to be a deep recession or not. We'll see what the Fed does. I think it's is it next week? I think is when they're going to announce. It's probably going to be a rate hike, but one of the things that for something like, say, a Netflix or Tesla is, how is the American consumer doing? Do they have extra money to still buy their Netflix subscriptions or their Tesla cars, etc. So I'd love to hear your thoughts on any one of these things, and where do you think Netflix goes from here? And the big one, as I mentioned to you guys, is a couple ones. Is are people satisfied with HD when they sign up for the service, and are people going to miss the $9.99, or they're going to be, what was the price increase to? Was it $15.99 to $15.49? And might as well spend the extra $4.50 and get the $19.99. I'd be curious your thoughts on that, and on which Netflix membership you have, because I think a lot of people, or maybe almost everyone I know, has Netflix and Amazon. It's sort of like the couple things you need, and then the other ones are kind of more optional, be it your Apples or your Disney streaming or your HBOs or all the other ones that are out there. So thanks again for watching, everyone. Love to hear your thoughts on this one, and I'll catch you next video.